Good morning. Today is Monday, February 24th, and over the weekend, Berkshire Hathaway released its annual report and the all-awaited chairman's letter from Warren Buffett. And while there's a ton to talk about the letter, about Berkshire, I just wanted to focus on the valuation and some of Buffett's comments in the letter and how he might, and Charlie Munger, how they might value Berkshire Hathaway. So, in the notes to the financial statements, we've learned that Berkshire was a repurchaser of its shares over the past year and over the past quarter. And over the last 3 months, the high share price that they paid to buy back their own shares was about $333,000 per A share, which if you take that and translate it into a market cap using the average shares during the fourth quarter, the valuation is about $544 billion. So that's what the price implied that they were paying for the entirety of Berkshire Hathaway. Now, Charlie Munger has used an approach which is not it's a little bit different than some others, but I suspect he's still using it here. So Charlie has said that when he was chairman of Wesco, he used the value of deferred taxes and equity. Basically, he said, add deferred taxes to equity, and that could be the value of Wesco, conservatively calculated. So what I did was I took the ending shareholders' equity of Berkshire Hathaway, which is about $425 billion. You add to that the $129 billion of float, which is technically a liability, but it functions more like equity because it sticks around so long. And so does the deferred taxes. Those are a little bit different because they can have a shorter life than float. So if you take the $67 billion of deferred taxes, add that to $424 billion of equity and $129 billion of float, you come out to something like $620 billion. Even if you use half of the deferred tax amount, you still end up with $588 billion. So that's just one approach that I suspect Charlie Munger is using. Buffett dropped a lot of big hints during his letter, and one of which was there's no urgency to buy shares with an estimated value of 95 cents for an estimated value of $1 for a very real 95 cents, and but he dropped a lot of hints in terms of Berkshire's earning power. So in the beginning, he says, Berkshire's operating earnings were about $24 billion. If you're going to add cash and investments to that, you have to back out the investment income. So if you take that out, you come out to about $18.5 billion of non-insurance operating earnings. Throw a 10 times multiple on it. That gets you to $185 billion. Add $125 billion of cash and $285 billion of investments, which includes the equity portfolio and the bond portfolio, and that gets you to $595 billion. So that's another check on what Berkshire's value is. And again, during that last quarter, they paid an average of $545 billion for Berkshire. So that suggests that Berkshire is meaningfully undervalued. I wouldn't go so far as to say significantly, but it's meaningfully undervalued. And Buffett, over the course of his career, has been very, very conservative. He's been one to underpromise and overdeliver. So I'm not surprised at all that he's putting words of caution. He doesn't want to come out and say that Berkshire's value is X, and then something happens and it might change that value, or The share price might go down a little bit, and people say, hey, you told us it was this. So he's being very cautious in, I think, his estimates and his words, and but he was pretty specific about some of those numbers. And when you go right through and you add up, the cash is 100% real. You might have a differing opinion whether the investment portfolio is undervalued or overvalued or not. But if you assume that it's fairly valued, that's a pretty straightforward calculation. And then it's just a matter of the operating earnings and what sort of multiple you want to put on those, and what those will look like in the future. Could they grow? Could they go down? These are all those decisions that you have to make yourself. Included this year was a small amount of insurance underwriting earnings, which Berkshire over its history has done better than break even, but that's not giving any significant boost, or taking anything away from the valuation. So it's pretty much a normal year in terms of Berkshire's earning power, I think. So even conservatively calculated, it seems like these guys are putting it at 600 billion. I think it's worth a little bit more, but that's just my personal opinion. Time will tell. Ultimately, the value of any asset is how much cash it can produce, and Berkshire has a star-studded team of operating companies and businesses within the company. Difficult to expand because of its size, but still very, very good businesses. So time will tell, but those are my thoughts and Buffett's thoughts on Berkshire Hathaway's intrinsic value. Have a great day, everybody.